What's up, guys? Welcome back, or welcome if you're new. Malik here. So, today, as you can see, I have some notes on the screen because, like, I went through a trade today. I'm not sure if I did the right thing or if I did the wrong thing, but I just wanted to note exactly what happened and then we discussed that today. So, today I took four trades, right? So, the first trade was a loss, and I'll show you where the entry and the exit was. So I actually entered to the sell side in the morning. So remember, this is 5 hour difference, and then with the dates it's a day behind. So this is November 22 trades, and then this is a 5 hour difference, right? So this is a 10 o'clock trade because this is a London platform, right? So at 10:16, and I'm trading on the 1 hour mainly at 10:16, which would have been part of the first candle of the day, which would have been this candle. Yeah, 10:16. Enter to the sell side at 280.90. 280.90. Yeah. So, okay. I can perfectly show you what was the thought process when I was going through this. So basically, this was the candle that kind of kicked off the morning, and I was thinking that the market would have continued more down, right? And then within 2 minutes, the market began to bounce up and close me out. I'll show you where it closed me out by using a red candle. So at 281.70, 281.70, 281.7. So I bought to the sell side here, expecting that on the next candle the market would have came down. It didn't. It came right back up, and then that closed me out with a loss of around $43, right? So when it comes to stuff like this, I hear most traders, from what I'm learning, they try to use at least a 2-to-1 risk to reward. So this is where I had the stop loss, and then I had this was my expected profit, so I just kept it two. Can only lose the max amount there. No, it's actually more up. Okay, see, I'm thinking two. Two is like right there, huh? Two is like just one pip above, or one like movement above. But basically, I had this is the first candle, and then I entered for here to get more downside, right? And then around half or a little bit more is where you'd get your stop loss. Reason being is that if the market tends to push up with strength the other way, then that's when your trade kind of is invalid at this point, and you just call that a loss. So basically, that was the first trade. That was the first trade that got me in a loss. So I can't even get rid of this one now, get rid of this one, get rid of this one. Okay. So the second trade now was also to the sell side, right? At, let me see, also to the sell side at -5 from this 11 exactly. So 11 exactly would have been the next candle, this candle. So 11 exactly at 283.35. 283.35. 283.35. 283.35. Okay. 283.35 to the sell side, but then it went against me. And I'm thinking I only had a stop like right above it, which was 283.38. That's a tight stop though. 283.38. I'm probably just okay. I think the trade began to go against me midday, like during the play, and I'm like, okay, I'm obviously wrong. Let me close out this position. I'm believing the market would continue going up. So that's when I just close out that position, flip the other way. and tried to regain some of my losses, which is a bad practice. Let me tell you, it's a bad practice to try to flip and chase it to the other side unless you're certain that it's going to continue. But I flipped it just looking at the next candle making a break above this, believing that it would have continued, to which it did. So I flipped it and entered. Let me see, when did I enter here? At 11:09. So that's part of the 11 candle as well. That's this candle still 11:09, and I entered at 283.36. Damn, I'm on fire, huh? I'm just playing, but watch. So I entered to the buy side here, 283.36, right? And then I sold it. So you -5 from this, which would leave you at 14.13, which is at the 2 o'clock candle. So on the 2 o'clock candle, which was this one, and believe me, this one was just scaring me. So 284.07. So I definitely exited. So what was happening here? My original take profit was here, which is 285.09, right? This is where I should have held it until, but because of my fear of the amount of money that I lost this morning trying to trade this one down, and then it knocked me out somewhere around here, I wanted to just recoup some of the losses, right? So that's why I closed at 285.07, which is right on this line right there. Okay, so let me even show you what I wrote here. How can I show this some more? Let me bring it up and just read it. So I had the right trade to the upside. As you can see, I entered on that red candle, and I could have rode it all the way down, all the way up, but then I closed it out trying to ensure I recovered some of my losses for the day. And I wasn't sure if this is the right thing to do, or should I just trade my setup regardless. Because let me show you, if I was doing, I think I still did a 2-to-1 risk to reward, if not more. Is either I did a 2-to-1 risk reward, or I was just playing it to the next level of support. And you could actually see it here, like it mess with this level here, mess with this level here. Like you have close levels of support here. It's close to a level of support. So I could have even put it somewhere here to look for that would be a point that I could sell. So around here, or even there, I could have sold it. All of that one, that's where like you have some points of like key points of interest, like points that would have been either support or resistance that you could expect price to go to before you either exit your trade or take some profits, or you might expect a reversal there. So that seems to be what would have been the ideal trade, because I had set my take profit there, but because of fear from the previous trade, I decided to exit it here anytime. And you notice something about the strategy, as just take a look at the candle here. So when price tries to go against me, and then I have a candle and it seems like it wants to go like more than half of the body or 3/4 of the body the other way, that's when I'm like, all right, it's not worth it taking the risk. It's a possibility that the price might reverse, and sometimes to me it's not worth that risk, you know. So that one I had a $34 profit regardless. So I still had profit in that trade, $32.50 overall because of the trading fees, but I still had profit from that trade. I could have been more, as you see. I was actually right in the trade, but I didn't want to take the risk. Honestly, I could have set it a little bit down more. Could have came down a little bit more, because I don't know. It just seems like sometimes the market maker can see exactly where his stop loss is, and that's exactly what happened here. The exact price that I had, you can see that the market maker came down there and just took it out, you know. Like that tends to happen a lot. So the last trade was a small trade. I wanted to catch it to the upside, but at the same time, I did not want to expose myself to too much risk, and the market maker just came right down there and touched it. That's why I just kept it small. I'm like, yo, I know how you guys play dirty. Like it's like you're watching my books or something. So I am not messing with that. So at 19, so 19 minus 5, 2, so same candle, 241. So that's 28461. 28461. 28461. That was my buy entry. And then I had a sell at 28440. 284. 28440 is right under here, huh? Yeah. 28440. So with this, I entered for a buy here. As soon as the price came to around here, I'm thinking, yo, it's not worth it at all for me to stay in this trade. I was believing it's gonna reverse and keep going down, so I just exited, right? And that was basically it. Just me trading on the 1 hour, looking at the previous levels that the price open and close, and then using that as some indication, and looking where price actually. Look at this. Like you have an open and close here, right? You have an open and close here. When you notice it open and close above the previous candle close, and then you see the next candle is like very bullish. That's like typically how you can tell what's going to happen or have some understanding of what might happen in the market. So you have a strong rejection here. You have an open and close above previous price, and then you continue, and you also have it bouncing off the 55 EMA here. So those are like a lot of confluent factors that might have given me an indication that it would have continued going up. So another thing I wanted to look at today, because I kind of learned this, and we're done the trade reviews for today. So that's basically the 4 trades that I took today, and then I only had a loss of like $20 for the entire day. But the system seems to be getting more consistent, which is my main goal. Getting the system consistent, and then that will bring in the profits, because you can basically put more capital into the system, same risk to reward, and if the system is profitable, you have more than likely you're just going to make money because the system works. So I noticed something today as well. So while the market is going up, right? So this is a relationship I think people need to understand. So while the market is going up, if you look at what's called a dollar index, I guess this is tracking the value of the dollar. So if the dollar goes up, the market goes down. If the dollar goes down, the market goes up, and so does like Bitcoin goes up, because it's basically saying that your dollar buys less of the market. How is it go? Yeah. If the dollar goes down, yeah, your dollar buys less of the equity. And if the dollar goes up, means that the market is going down, or the value of the market is going down, so your dollar can buy more of equities. All right. So if you have a strong dollar, you might have weak equities. If you have a weak dollar, you might have strong equities, because it's going to take more dollars to buy the same amount of equities. But in the inverse, it would take less. Right now, it's going to take more dollars to buy equities. And then if the dollar is high, it takes less dollars to buy more equities. All right. So if the dollar is high, the market might be low. If the dollar is low, the market might be going up. So this is today. Let me see, where did the dollar open today? At 9. So here, the dollar opened here, right? It's just been a downtrend, and it even passed the 55 EMA with strength, with a candle body, broke down. So that in itself could have even pointed me to, like, say, the market is continuing bullish, but this is something I kind of is more proven today for me, But that's basically it. And what else? Today they had the FTX hearing. It doesn't seem like much is going to come out of it, honestly. But that's looking like how it is right now. let's just keep watching and see what's going to happen. Bitcoin USD. Bitcoin came right back up on the 1 hour. It's like bouncing on the 55 EMA here. So it might continue going up. It forms some level of support here on the 3 hour. Some level of support there on the 4 hour as well. And on the daily, some level of support there as well. So that might be a temporary bottom. Let's see how long it lasts for. But yeah, that's basically it, guys. And if you actually end up watching my video, thank you. If you don't and you stumble upon it like years later when I'm rich, thank you. I'm still here to teach you, and I want to be consistent on this for years to come until I'm extremely profitable and I'm able to share a lot of value to everyone. So that's all. And today was November 22nd. Thank you. Happy Thanksgiving when it comes, and I'll see you in the next video.